All right, what's good, gang? It's your boy Chak Investing back with another video here on YouTube. Um, so I'm actually starting a new series here. It's gonna be basically I'm gonna start doing daily reviews. I figure that it's actually just easier than typing out and logging for me to actually just talk through what I've observed today, and I feel like it's gonna retain in my head better. And then at the same time, I can give you guys more content about the 22 model. I know some people on this channel are really interested in hearing more about it, so I'm gonna start doing daily reviews. And without further ado, we can start getting into that. So that you can make sure that you get these daily reviews every single day. You can follow the market and learn. And I can show you exactly what I'm observing and what are important levels to me on a day-to-day basis, so that you can keep track of what's going on at NQ, and ES if you're trading those. Let's just make sure that you're following me. You're subscribing. Press the notify bell. Press the notification bell. And press that like button. That like button is basically giving me a form of payment. I'm doing this for free. I don't ask for any money. So, if you can press that like button, then, that'll be basically a way of compensating me for the time that I'm putting on here. So you can just press that like button, even if you don't want to compensate me, but in your heart, you're a good person. Like you just want to just do that. Just press the like button. Anyway, let's get into today's review. So we're looking at NQ right here. This is not a weekly review, so I'm just gonna do today on Friday, right? So we're still inside this weekly civvy, right? That's all the way over here. We're still inside this weekly civvy, and we've now had 1, 2, 3 candles inside this weekly civvy. Two dojis that really have not been expansive in any nature. They've gone up and down throughout the week, but this will explain why these past 2 weeks have been pretty difficult to trade and why you might have seen some drawdown in your account. Because when you reach key high time frame levels like this, it's very often you can find it can be very choppy conditions, or you see that price doesn't really swing anywhere for the rest of the day. It's going to be hard to hold, and things are, there's multiple PD arrays on lower time frames, like on the daily and the 4 hour, that start to converge over each other because we're in this range and we're not really expanding anywhere. Versus like a week like this, or a week like that, where price is really moving. A week like this, like you probably are way more profitable because it's easier to catch those ranges now. So we closed in on Friday above in the upper half, but this could be a mohawk, right? Price is pretty 50-50 on the weekly candle. So what does that mean? I'm gonna be looking for short intraday scalps, and not really anything that's gonna be a major long-term hold, because we're not sure where we can do from this level. On the daily, on the Friday, right? We had a big expansion, and I thought that we could probably close above the weekly high. So as you can notice, actually, let's go back to the weekly candle. So this week we took out the weekly low, but then expanded today on Friday, take out the previous week high. Now, usually what that means typically is that you can see a reversal, of price action. Now, how I would have thought that price would reverse is that if we took out the previous week high and then took out the previous week low, then I'm sure this would have been a very, expensive candle downwards, and we would probably retrace some of this movement here. But we're in election season. It's most likely that equities are going to get propped up, right? No president wants to end the term with a down market, so you'll see a lot of times that coming up to election season, you'll find that price is pretty bullish in general. And that's probably a pretty good case for why price is not able to reject from this weekly civvy. And I actually ideally would like to see it close above it, because if you look on ES, we've already hit all-time highs, right? So some people would look at this as SMT, but I'm actually looking at this like a six sister, where NQ can catch up to ES because of the context of what's going on, right? And also, let me double check as well. Like, is October supposed to be a month that price is bullish or bearish? Let me actually take a look at that real quick. And if you want to know like how I'm checking this, like you can comment below, and then I'll say it in the next video. But just make sure you comment, and let me know if you want to know how I'm figuring this out. There's a chart that I have that I reference, but yeah. So it looks like going into November, typically October we trend higher, but then going into the tail end of October, we start to become bearish. And so that's probably why you start to see some of this consolidation, right? Because we're in the tail end of October now. Typically, we're supposed to be falling off a little bit, but we're in election season. So price could also, on the upside, also be going upward. So you can see that price is probably a little indecisive, but we're bouncing back and forth between bullish and bearish. These are just contexts that you need to keep in mind. Let's look at the daily. So like I said before, we took out the previous week low. Now on this candle, we opened up this Friday. We started expanding higher. I thought we were going to get a close. That's what I would like to see, to be very strong, that we were going to probably go up starting next week and continue upwards. But we could probably chop all again next week as well, or we can go lower or higher. So it's kind of indecisive. On the daily candle, we went up and closed inside the previous day high, previous day low. Sorry, this candle's previous day. Of this candle's daily high and this candle's daily low. So it's the previous day, right? So very interesting candle. I don't think we really see this kind too often. So what will be my bias for next Monday? We'll just have to kind of see. Monday there's no news, so not really sure where we're gonna go from here. Because of this wick, we can either stay inside this range, inside this weekly CIBI, or we can go lower. Take out some of these LRRs here on the daily. Not sure. On the 4-hour, let's see what we had today. So yesterday in the AM, we came into this weekly 4-hour buy side imbalance, sell side inefficiency. It filled it. There's also like a volume imbalance right here. So the reason why I'm including that is because ICT says when you have a volume imbalance that's also connected to a fair value gap, that whole thing is basically just the buy side imbalance, sell side inefficiency. If you don't believe me, you can go check, see how price actually interacts with the CE of this. That'll give you confirmation that that's actually correct, right? So we're delivering from that. We had all these LRRs up here, right? We took out all this liquidity below here. Plus, we're reacting from a fair value gap over here on the 4-hour. It's actually a BPR. And look at how that nice reaction off of this consequent encroachment level on that 4-hour fair value gap. So, that's what I thought. Maybe we actually could expand much higher. We could see ES had a pretty similar move. We're reacting off a daily fair value gap here. And then we came and reacted off that 4-hour BISI. And we took out the LRRs. And we look much cleaner here on ES, by the way. And we also took out here. So, I thought that maybe we could, and we took out the previous week high on NQ, but we hadn't on ES. So, I thought we still had a long way to go on NQ today, but it seems that, price did not want to close outside that weekly CIBI. So you need to keep these kind of things in mind. When I see this 4-hour candle, I'm seeing it expanding. I'm like, okay, maybe we're bullish. But then I see that we wick over these relatively equal highs and we come back in aggressively. I mean, that's an indicator to me that I'm probably wrong and that price is probably going to reverse and stay inside this weekly CIBI. And then what's the next draw on liquidity? Because this is a large down candle like this, most likely the next candle is going to be a down candle as well, right? We went above here and we closed inside this other candle's high. T Trades actually has a pretty good T Trades has actually a pretty good series on this where he teaches about like the previous candle, and if you like wick above it and you close below it, you're probably gonna be looking for the this candle's low to get taken out, which is also paired with the fair value gap right here on the 4-hour. So this is like the 10 a.m. session, but 10 a.m. onwards, probably once it's closed at around 2 p.m. I believe, and this started, the next draw on liquidity would be this 4-hour fair value gap. And also when you notice when we came back in here, price just pretty much chopped for the rest of the afternoon. 4-hour levels can be pretty hard to get through. It can be high resistance liquidity. It's much nicer when you get past, like, over here, you'll see in the morning. Actually, I'll draw these out so that you can see what I'm saying. These 4-hour CIBIs, when we got there, like once we got past it, price really started expanding a lot easier. But we'll get to that in later time frames. So we came back down into this 4-hour, which is really a BPR because of this level over here. And this is also an order block. So a lot of PDRA is converging into cells. A lot of this like choppy price action we're coming back into. Not really best places to take executions. Shorts up here, longs down here would have been really the best places to be. On the 1-hour, what do we have? On the 1-hour, right? let's start from what is this? 12 midnight. Create an order block, come back down, push through the previous day high, close above it, mohawk down below it again, but we wick and touch this, this 1 hour bearish order, 1 hour bullish order block. Go back up, indicating price is still bullish. We find support on the previous day high right here, right? This is the previous day's high. Let me just prove that to you real quick so you understand what's going on. Previous day high, previous day low, right? So this is that other daily high to the left that we had, because yesterday was an inside candle, right? So yesterday was an inside candle. So I still keep these levels on because these can still be, drawing liquidity. If we had closed inside these levels again today, then I would have thought that we could probably consolidate for a long time, probably all throughout next week or for at least a decent amount of next week. But when you see this is basically called a volatility candle, according to ICT. So when price is like the first day after price closes inside the daily or the daily high or low, that's how you know that the next day should be a pretty expansive day. That's why it's called a volatility candle. So we find support on the previous day high right here. What is it, 7 a.m. So all throughout London, we're basically just trickling upwards, right? Catching a good buy down around here would have been great. But I don't trade London session, and I only wait until about 9:30. Just my model. We start to take out all these LRRs over here, lower in liquidity. We take out that previous day here on this 9 a.m. candle. So around the 9:30 open, we start blasting higher. And also you'll notice when you start doing your weekly timeframes, you'll notice that largest moves tend to come around this 9:30 open to the AM session. That's why I like to focus on the AM session. In PM, oftentimes you can get maybe half to 1/4 the amount of move, but because of the context of us coming back into the weekly CIBI, which are these levels right here, that's why price had a pretty active PM session, because we did not want to close above the previously weekly high. We wanted to come back decently in and create another doji candle on the weekly and daily. So we expand higher, we wick above. This is the previous week high, right? So let's go back to the previous week. That's the previous week high right there. And then we close inside of it. Once I see that, then I know we're probably going to come back into these inefficiencies, and we're probably not going to continue expanding maybe into the next session. Or I would need to see a really sharp reaction from this low, or from this, from maybe not even filling in the upper half of this fair value gap. And I would need to see an immediate reaction for price to continue to go higher. Otherwise, because of this wick, I know that price is probably going to reverse. Because think about it, we're going up. This is like a purge of liquidity, and then come back down and wick lower. Usually when you see this pattern, you see price start to reverse, right? You can start a market sell model on smaller time frames. So in the 1 hour, we expand higher, take out the previous week high. We don't make it to the top of the daily CIBI over here, right? Let's just go back to the daily, so that's the daily CIBI that comes from over here. Close back in it, come back into this 1 hour fair value gap into the afternoon, and then another expansion candle, and we stop here at this discount fair value gap on the 1 hour. Basically come back into the range. And then also you'll see that basically this was a return to an opening range gap that we had left open in the morning. That was also drawing liquidity. You see the same moves basically happening here on ES. ES was weaker. We ended up taking out this low at 1 a.m. NQ, we couldn't do that. We never got there. So NQ has been stronger all day. On 15-minute, all right, let's just start here from the 9:30 open. We're trickling higher as we did in London. There's some 15-minute fair value gaps over here that I noted as well, just to make sure that I wanted to know any potential high resistance liquidity that may be there at 9:30 open. This is the opening range gap right here. You can see that we don't even retrace into it barely at all. In fact, I don't even think we did at all. Pretty rare. Price starts expanding higher to take out that daily high from the daily high from the previous day that I mentioned. Closes above it decently. This is also the daily CIBI CE. We close above that as well. Close above this, I believe, is the weekly CIBI high. Close above that. We start expanding higher. Take out the previous week high. We wicked, but then we had another candle that traded through this candle, but then came back down. Did not effectively keep expanding. Came back down into a 15-minute fair value gap. And at this point, once we've taken out the previous week high, notice how price just starts to chop around. When you've taken out so many levels like this and you don't see an immediate reaction lower, like we're starting to just trickle around, don't touch that. We're done for the session, right? Wait until either the lunch macro or wait until PM. You know, a lot of times I've made a lot of trades where I'm forcing the market to continue going higher, or if I want to just catch a reversal because we're in such a deep premium. But when we reach such a, you know, especially a critical level like the previous week highs or weekly highs, weekly lows, or filling in weekly gaps, like a lot of times, like you can see price just consolidate for the next hour or two, um, because we moved a lot, right? So people are indecisive. We're wondering, should we continue going higher? Should we continue going lower? So anyway, price chops around. We don't get real movement until around 12:45, which is heading into that lunch macro, 12:50 to 110. Remember, a macro is the first 10 minutes and last 10 minutes of every hour. Drop lower, and then we reach back to this opening range gap that we had left early in the morning. So this would have been my target, especially because ES came back and hit theirs as well. Oh, sorry. ES, this is ES right here. This is the opening range gap from the morning. We came back and filled it in completely. So on NQ, I would have thought, yeah, definitely we're at least going to get back to the opening range gap. And we just tank completely until at 130, and then price just starts to consolidate for the rest of the afternoon. Once you've had a big move up and a big move down, typically the last couple of hours of the trading range are just going to be pretty choppy. Not really worth trading anymore. Took a 5 minute real quick. Yeah, this bullish order block. We rise higher through key levels. This is a 15-minute fair value gap that was formed from this move, right? We get there higher, we come back into a 15-minute fair value gap, we raise, but then we don't decide to keep expanding. We chop, we come back down to 15-minute fair value gap, and then we just chop around basically until about 12:50 macro, start rising lower. Then we had a order block that formed, right? And I actually wanted to purchase because we had a 15-minute SIBI that was up here that I thought we could draw into, plus thought we could make it back at least to equilibrium of this range. We don't even get there. Price goes back down and fills in this opening range gap, and then basically charts the rest of the afternoon. And in hindsight, when this move had already been done and this move came back, really shouldn't be taking any more executions. We're done. It's a Friday, and we're inside this weekly SIBI. We're obviously not trying to close outside of it. I shouldn't really be expecting any more expansions in trades. 1 minute. Go through that real quick. All right, so like I said, let the opening range gap open. Usually when you see the opening range gap stay open like this and we just continue to expand, usually it's going to be a very large expansion. And there is a possibility that if we kept going, we would just keep going for the rest of the day and we would not come back and fill this. That's a really bullish day. But, you know, obviously we showed a willingness to start coming back lower. And I saw ES doing the same thing even faster. So that gave me an inclination that we probably are going to return back to this opening range gap at some point. We chop around. Let's look around. We just chop around basically. At 11:30, though, you see that we take out this low and this low. Usually, that is what happens during you know, the 11:30 macro, which is it'll take out the first low. Basically, it'll take out the first low after 10 a.m. that is next to it. So you see at 11:30, we take out this low and it'll taking this low as well. Lunch, we don't really do much. And then starting around 12:50, where is that? We create this 22 model. You know, we come up here, we take out this high, but we don't take out this low. So it's actually not a real 22 model until we break this low right here. But because it's not doing that with much energy and speed, and we've already had such a large range day, really wouldn't have wanted to take this one way for more confirmation. Then we start to expand lower. You know, maybe what I could have seen as a half decent trade coming back down into this opening range gap, especially considering ES had already done that, is maybe around, let's see. This, I feel like we were already too low. Around here, it's probably where I would have put half decent trade right there. Come back down to the opening range gap for a 1 to 4R. Reason why is because we have this breaker over here to the left. So look at this breaker. So as you can see, you know, you would have had this breaker on the left that could have kept price going lower. We closed outside of it. We come back and we return to this very small SIBI, right? Separation between this candle and this candle right here. We draw that out. There's also volume balance in there as well. So we're going to highlight the whole thing. 1 minute CB, we return into it, have a very good reaction. This is a strong algorithmic reaction, and we start to run our way through it. That's how I know that, yeah, price is probably just going to keep falling all the way down to the ORG. What time did that happen? Let's take note. Around 118, so it's pre-130. I only would take executions in there when price looks very obvious and it's moving with very large candles. And these look like half decent LRRs, but look, this high is taking out this high is taking out that high, right? So these are intermediate term highs that are actually showcasing market structure is actually pretty bearish, and we don't necessarily need to come back up here to take out this liquidity. Plus we have the opening range gap below as well that we need to go back to. So there's a really strong draw. So I would have kept my stop over the recent high. I don't want to see this gap filled in, right? We've already touched this one. And we have an order block right here. So I don't want to see this gap filled in. I want this to act as a breakaway gap. We have this breaker. We're above the CE. I'm keeping myself above the CE of the breaker. We have this SIPI just in case we do want to draw back up in there. And, we have this bearish order block as well. So multiple PDAs that should have stopped price and still have a half decent RR all the way down to this ORG. We eventually get there, retracing back into premium arrays. And then we have this pretty aggressive reaction off of it and a break of market structure. So this is where I would have taken my next 22 model trade, but because we couldn't quite because we're pretty bearish. Another thing to keep in mind is that you want to do your analysis on higher time frames even in the afternoon as well, because I'm going to show you something right here that would have shown why that trade was not valid. Because look at this, there's SMT between this high and this high on ES. So look at that same high. There's S&P there. We're bearish for the rest of the session. So I should only have been looking for for shorts. And that's okay. You make mistakes. Sometimes you don't see it. That's all right. Plus, we've already moved a lot. Like I shouldn't have really been taking any more executions. So just so you know where I put my stop loss, I put it above. I entered here on this breaker. Because when we close above it, I'm not like I don't want to see. It's possible that we don't return back into these fair value gaps. I had it below this inverse fair value gap plus this BPR. Plus we have this wick to the left as well. So a couple PD arrays. And then I would have just aimed up here, come back up here and maybe take out some of these LRRs but in hindsight, like that wasn't a valid trade. I can tell you that, interjected that doesn't make any sense. And basically we just chop for the rest of the day. So this is today's daily review. Let me know if this is helpful, and I'll be posting this and you can watch it. But yeah, this is pretty much what happened on October 25th, 2024. Make sure you subscribe and press that notification bell. All right. Peace and love.